What's happening? Good morning. Good Monday morning. So coming into today, let me grab my profile daily. So one thing we definitely know, right, is we broke away from this balance last week on deplorable volume. Some of the lowest volume we've seen in a long time. Now that said, we're obviously fully aware that we're in, the end of summer, which is the slowest time of year in the markets. And the lack of volume just really shows us who the participants in the market are. And it really just eliminates the idea that very strong money is in this market doing much business at all. So again, nothing's really changed for me. I still think the odds favor a pullback towards 44.20 area. I think that's a good opportunity to potentially get long, depending on how they respond there, if the buyers are going to step in and try and change that into support. But as this goes up, you don't want to just fade this just to fade it, in my opinion. I think there's a better opportunity off a liquidation to potentially get long again, and just monitoring that type of trade idea. I have a real lack of interest in the ES right now. I think the ES is just trading very, what's the word? It's exceptionally poor in nature. It's just, there's opportunity, but there's nothing that really jumps out to me to make me want to, be all in on anything. More than likely what I'm doing is I'm just waiting for best opportunity across each and every market. And even with today, Globex obviously is sold off a little bit from what was, just a perfectly balanced garbage type trading day on Friday, where, your range was like 10 points. And there was just really nobody taking control of the day at all. And that started right away with B period, right? A period, opened and danced, B period opened and, danced in the same line. And from there, you've just traded inside the IB until late in M. So that's the second time we've seen something like that in a very short period, where the IB is held for the day until late. Really, this entire move comes from Thursday, right? That trend day Thursday, which again was a very interesting trend, is kind of a sneaky trend setup. But the weakness in the market is clearly there. I mean, everybody can see that. Everybody can see the structure is poor. Everybody can see, the volume is poor. It's exceptionally mechanical, but again, that is the expectation with who you're trading against right now, with who the competition is right now, is, the participants in the market are extremely mechanical. So when you look back and you look across here, look how many times, last week, you made a low, Globex, buys right off that low. Then you come down, you make a low, Globex buys right off that low. And then you come down, you make a low, the next day buys right from that low. It's just the same process over and over again. So to monitor for change for me right now, like I've said before, I'm not even paying attention anymore. I shouldn't say anymore, but for right now, I don't even care about the one time frame and on the day time frame. I think that means almost nothing at this point. What I'm interested in is the mechanical levels continuing to play. So, for instance, right now when we're watching our Globex session, we're buying from what was a previous all-time high, which was, turned into support here in H period on that trend day, and then the market rallied from there. So they're still trying to buy that 44 area. So that's still a mechanical level that's still potentially holding. So even though, the potential is there for a gap lower today, the one time frame is ceasing, the mechanics are still in the market. So it's still a very weak market in that sense, which is kind of why for me, does the daily one time framing really matter right now? In my mind, it doesn't. I think I'm pretty strongly opinionated that your weekly and monthly are probably the more stronger time frames to watch for stopping one time framing. I think the day time frame is so mechanical right now that really we just need to monitor for levels that have shown strong interest prior, and see if they continue to show interest at, very, very visual references. So for right now, the ES is still doing that. The ES is still finding support at very, very strong references. That's why I would say, the odds are, when we talk about odds in the market, the odds obviously favor a massive sell-off at some point. They do, right? Based off the structure, based off how this market's traded. Sure, you can say that all day, every day, and eventually you're going to be right. That's just a fact. But as we continue on, when I'm talking about the odds, I'm talking about the day time frame trading odds. So being a day time frame trader, I'm just looking for the best opportunity to enter the market to make the odds in my favor, to make my risk to reward better off. So as I'm watching this, and I'm saying the odds favor pullback 44.20, I'm not saying that in sense of I want to sell the market targeting 44.20. No, I don't want to sell the market really at all. The market is as strong bull as it gets right now, and it just continues to rally and rally and rally. And the opportunities have been on liquidations to buy for the next leg up, whether that leg up is slow, long, it doesn't matter. That seems to be the best opportunity for quite some time. So I'm looking for that liquidation on 44.20 to shake some of these, really, really weak buyers that are up here, chasing this all-time high higher. I'm looking to shake those buyers out, let them liquidate it, and then have more mechanical buyers enter in at another very mechanical reference, which for me would be the 44.20 area. And then below that, the 44.08, 44.06 levels. So that's what I'm talking about when I'm saying odds. I'm really just looking for an opportunity to get back into the ES on the right side, which I believe, will remain the long side probably for some time until, something changes overall. So that's where I'm at right now. I do think, as we move towards September, the odds are greatly increasing that we get some sort of liquidation. I think when strong money does come back into this market, if you were coming back in to rebalance or re-enter into the market, I think you would want to do it at lower prices and then rally in through the new year. So that's my mindset as far as what I would want to do if I had, significant capital to put into this market. I wouldn't want to do it up here. So the chances of a bigger, stronger liquidation, sometime in September, maybe mid-September, a little bit later on, I think are greatly increasing each and every day. So that's where I'm at as far as the ES. I don't think it's tradable today. I think it's a great market to monitor. And I have levels 44.20, 44.08 as areas of interest to watch. Now, taking a look at R2Y. So, man, R2Y had an opportunity, right? And we talked about this. We said, how many times are they going to be able to hold the 21-day moving average and try and turn it into support without breaking above the 50-day? And we saw it again last week. They continued to buy the 21-day, trying to reclaim it as support, but they cannot find a buyer to push them above the 50-day moving average, especially the 22.44 level. They're really, really struggling to get through that. So what do you have? Friday you have some liquidation. Today in the Globex, you're pulling it back a little bit again. And where do we find ourselves? Well, we find ourselves right back in 22.10, 22.02. So it's an area to watch again for two-sided trade and see which side wants to step in. Now, unless R2Y breaks through 21.60, and by the time it gets down there, unless we get some big, massive sell-off on a singular day, which, I'm not sure is really, in the cards, I would think your 200-day moving average is going to be sitting right there, and there's going to be too much confluence there for the sellers to rip through it, unless, again, strong money is in the market. And the opportunity is to look for a buy still against 21.60 until they can potentially find a seller below that level. So although it's, clearly failing at mechanical levels, we've seen this before. We saw them push up, fail at the 21-day on the daily, finally break above, fail at the 50, flush the 21-day again, and then start that process all over again. Now we could potentially just see the same thing. So for me, monitoring 22.10, 22.02 is really the most interesting level. And of course, my 21.63 to 21.55 area is your major support on the downside. But R2Y has done the same thing over and over again. R2Y cannot find a real buyer above 22.44. They just can't do it. They've struggled each and every time they've gotten above here. They've been smacked back down each and every time. Likewise, anytime they sell below 22.02, they're finding the same issue. They're not finding a real seller to sell the market below there, and the buyer is comfortable re-entering the market anywhere below 22.02. So for me, this is, R2Y is not greatly in an opportune, trading level. I think if they do break the 22.02 and you start to make a little bit more dip down towards that 21.60 area, I think it just becomes a better buy opportunity again for the overall target, which I still believe is over the 2300 level. So RTY for me is definitely a monitoring market again today. I don't think it's setting up for a great opportunity, but we're back in 2210. We're back at 2202, potentially opening on a downside gap like ES. And it gives us something to go with right off the bat. We know below that level they have issues finding a seller, and we know above 2244 they have an issue finding a buyer. So the odds would favor continued balance and trapping a seller below here, and continue to trap a buyer above 2244. So that's what I'll watch for today on R2I, and potentially see if it sets up for any sort of opportunity to maybe get into a continued swing long type idea. Looking at NQ, as I pull up NQ here, it's a broken record, right? We keep talking about it. It keeps doing the same thing. Each and every time we get above this blue line here, it struggles to break away. It struggles to find a buyer to push it away. And it's almost like gravity plays a role and pushes the market back towards that level. Now, where does NQ become very tradable is if NQ can break through its 21-day, and then we get a following day of a retest of this blue line on the upside, so coming back up towards it and finding a seller. That's the opportune trade right now in NQ. It's setting up for a better risk reward right now if that does take place, for the target of being that purple line, which again would probably be your 50-day moving average by the time that takes place. So on the daytime frame, nothing's changed on NQ. Same idea. When we take a look at the profile and the structure, it's just singular. I'm trying to make it smaller, not drag it that way. We've talked about these levels quite a bit for quite some time, and they haven't changed. Okay, they haven't changed. They won't change until something happens different. So there's change in the market. So, we were talking about 116, 124 on Friday. Said, let's watch and see if we're going to find a seller above that level again that's going to stuff the buyers yet again, which has happened time and time again. And likewise, when NQ pulls back into that 52.32 level, that is your major support level. So between there is expected chop. It's expected nightmares for day traders, right? It's where you can get chewed up, chopped up, and ran through the wall. So for me, again, that's what I want to watch today. 15116 to 15124 is being my resistance on the upside, and knowing that they're struggling to find a buyer above here. So monitoring above there to see if a real buyer is going to enter the market or not. And likewise, if they push down towards this 52.32 area, will the buyer remain active in buying against that, or are we finally going to flush that? And if we flush that, I do believe that's where the best trade will set up. On a retest of that, blue trend line that we have on our day time frame. So I don't think NQ is very tradable either. So, for me, we're 0 for 3 right now on the day as far as what I'm looking to get into, which could be annoying at times, but that is trading. So let me pull up the Dow real quick. The Dow, again, I'm not a trend line guy, so don't crucify me here that this trend line doesn't obviously, stop and start and whatever. But for me, I'm always looking for areas of visual reference that could potentially work as resistance or support, whether I use it as a trend line or, on the profile is just an area of supply and demand. That's what I look for in the market. So for me, the Dow put in pretty decent looking excess on the day time frame, and the continuation down here in the profile in the Globex session, I think is a good sense that we could potentially start to move back towards sub 35,000. So that's kind of what I'm watching. I think Friday's high gives you a great opportunity to trade against. I think that will be the strongest risk reward trade of the day today. Whether it comes in or not, we will have to wait and see. But I think the Dow in itself is probably setting up as the best traded market. Now, as we look at the profiles here, this is more of a sell tail than strong excess. But what's most important about this to me is if you were to draw a box, and we can just draw that box together right now, somewhere from this high to end high, somewhere in there, right? You can kind of look at that as this was your resistance, and then they tried to turn it into support here in Globex. Then they tried to hold it as support here on Friday, and now it's worked as resistance once again in the Globex session. So as I'm looking at that, that's clearly an area, and this is why I say Friday's high is probably a great opportunity to trade against today, is any rally up towards that 420 area. I think is a fadeable rally. Now, obviously, you want to make sure you're doing it properly because your risk is going to be at 100 to start. And you need to properly position yourselves if you're looking to take that trade. If you don't have, the margin to take it, don't even think about taking that trade on the Dow. I think it'd be detrimental to you. But, this line here is a gap, right? These two lines here, just below 180 and just above 250, or just below 250, sorry, is a gap. It's one that has held as very mechanical support, just like the ES. And again, they are trying to hold it as support here. So it goes back to what I was talking about in the ES is, yes, we're going to stop one time frame on the daily here. The odds are greatly favored unless we get some crazy rally into the open and we open back inside Friday's range across some of these markets. But the biggest piece of information I'm taking from this is those mechanical buyers have not yet given up. So what I would like to see in this, the Dow, and in the ES, these mechanical buyers that keep buying against, in the Dow here, they keep buying against this gap. I want to see them fail somewhere in that 420 range. I want to see those buyers buy the market up, get stuffed here for potential liquidation. For that, to me, is the opportune trade of the day. If it does take place, I will 100% take it and live with the results. So that is where I'm at with the Dow. I think the Dow is the most tradable market today. I think the other three are not very tradable at all, which is a little upsetting, but it's Monday. We're still at the end of summer. It's still super slow. And like I've said many times, this part of the year is not the time to get rich. It is really just the time to monitor and keep yourself from getting in trouble. So, that being said, appreciate you guys jumping on with me. If you guys enjoy these videos, please subscribe, set the notifications, so on and so forth. We do these each and every day. And like always, trade well, trade safe, and make sure you trade within your plan and live with the results. If it doesn't work, it doesn't work. As long as you made the plan based off of your homework, and you have confidence in how you did your analysis, it's okay to have a losing trade. It's okay to have a losing day. It's not a big deal. That is trading. If you trade outside of your plan and then lose money, that is a problem. So stick to your plan, do your analysis, trust in your process, take your trade, live with the results, and I will see you guys again tomorrow morning.